Hey, welcome back everyone. I hope you're all doing fine and well today. So in this video, we're going to discuss a wide range of stuff. Okay, we're going to discuss a lot of things from the usual economic calendar, the forex scanner. We're going to talk about the economic surprise mirror. You can see what is happening to the dollar right now. You can see we have the United States dollar very, very weak. Okay, we're going to discuss extensively about that and why that is happening. And then we're going to talk about the top setup. We're going to jump to the chart. We're going to talk about the dollar. We're going to talk about my open positions that are doing pretty well right now. And then we're going to talk about my trade recommendation and we will be done. Okay, if this is your first time watching the video, if this is your first time on this channel, please don't forget to give me a subscribe and give a thumbs up. Okay, if you like the video, don't forget to do a thumbs up. And, let's get straight into the video, guys. Let's jump straight into it. So, first off, let me bring this back. All right. First off, let's start with what happened on Friday. Okay, what happened on Friday? Friday, we got a very, very serious data that was very effective in the market, both on Canadian dollar and we have the one on the US dollar as well. So in the United States, we also got the average hourly earnings. It's still pretty much the same. Okay, the earning was still the same. Okay, nothing is that effective there. The unemployment rate also came pretty much as forecasted, 4.3, 4.3%. But the non-farm payroll is the one that is very bad. Okay, the job data, okay, it is awful in the United States. The market was expecting 75K. It is pretty low compared to previous, actually. Okay, even the previous was revised to 79K, meaning they added like extra 4K to the job data that report that we got last month. Okay, I mean the one we got last month, which was the report for the previous month before last. Okay, this current data is for last month. Don't forget, this month job report we get it next month. All right, that's how it goes. So right here we got 22,000 new job creation. Okay, 22,000 job was added to the economy. That is very small. I mean, only 22,000 people out of over 300 million people got employed last month. That is very, very terrible. Okay, if you want anything above 200K, that is a good job data for the United States. Anything below 150K, it is not so good. Compared to what we now have, 22,000, that is awful. All right, but let's not sleep on this one. Okay, let's go straight to the economic surprise mirror. Look at the economic surprise mirror. Okay, I like the way Nick and his guys have actually worked on this thing that we can see the meter right here. It's actually a meter, anyways. So you can see what we have: the three most powerful economic indicator in the United States. We have the growth, we have inflation, and we have the jobs. Okay, this is what the Fed use to decide if they are going to cut rate or they're going to hike the rate. Now let's take it actually from the very top. We have the growth at 50%, we have inflation at 50%, and now we have the job at literally nothing. Okay, at literally nothing, like 0%. Now, if we take a look at the growth right here, the economic growth, we have the GDP quarterly, we have the manufacturing PMIs, and we have the service PMI. Those are the data that capture the growth. Okay, those are the growth data. Those are the data that measure the robustness of the economy or the contractness of the economy. If the economy is getting bigger or if it's contrasting. Okay, that's what I mean by those English that I use. All right. So right here, the GDP growth seems to be looking very good. 3.3% is very good. Okay. However, the manufacturing PMI is still contrasting. Okay. The service PMI also seems to be boosted based on data we got this September. So we have a very good GDP. Okay, not the best, but it's pretty good. We have manufacturing PMI not good at all, and we have the service PMI also pretty decent. Okay, so we've got 50% there. So things are not so bad over there, but they are not the best either. Now let's take a look at the retail sales, the CPI, the PPI, the PCE. Yeah, those four is good. These are the inflationary data. Okay, we have the retail sales, the CPI, the PPI, and the PCE. Those are the inflationary data. Now let's take a look at them one by one. We have retail sales at 0.5%. Anything above 0.5% is good for retail sales. So that's fair. But when you compare it with what was actually forecasted, even the previous, you will see that the retail sales has dropped down because of the tariff. Things are now pretty much expensive. Okay, we're expecting a cool inflation, but it doesn't look like a cool inflation right now. Everything seems to be still pretty expensive. Okay, the consumer confidence is also not there yet. Okay, even the producer confidence is not there yet because they're still paying for all the product they imported expensively. I mean, Earlier on, I said there was a day I discussed that when the liberation day started, the liberation tariff show started rolling in. Okay, some companies that actually produce all these products kind of just like cut back a little bit. Okay, in how they plan to handle Trump tariff because they don't want the situation where they will scare the consumers away. All right. However, 1.5 months down the line, they figured they should just go ahead and just keep doing what they do before. Like consumer will definitely pay for it, and that's what they did. So if the producers, okay, let's say the China, EU, they're not the one paying most of these things. They just pay the tariff and add to the product, the price of the product, and let the people decide who has to pay for it because the United States is more like a consumer-based economy. They consume a ton, okay, they consume a whole lot. All right, so that is what. Now let's take a look at the PPI. I mean, did alone even explain PPI and the CPI that are still pretty sticky? Okay, the market is expecting what a reduction in PPI the last month in August. Okay, and we got 3.3%. Meaning production now is very expensive. All the raw materials they got from China, they get from Italy, they get from Brazil, Canada, Mexico, where they got the from production material from. They are still buying it expensively. All right. So inflation jumped from 2.5% to 3.3%. The PPIs. That is bad. Although it is good for the dollar itself as a currency, but it's very bad for the economy. Okay, but right now, when we're talking about it, we're talking about the economic heat map, like the general view of the economy. So that is another thing. All right, 2.7% PPI seems to be slowing down, but it's not as slow as we want it to because we saw that it came as previous 2.7%, 2.7%. Nothing is actually happening. And with the job data that is now awful now, we don't know what's going to happen this month. I mean, this week, because we have some data coming this week, and most of them are the inflationary data in the United States. Okay, we're going to talk about that later too. All right. Now, moving forward, we've actually talked about the retail sales, the CPI, PPI, PCE. The PCE was pretty flat last month. Okay, just pretty much flat. Nothing to look over there. Okay, it's sticky. Like I said, that's why we gave it 50%. 50% is actually very good. All right. Now, we have the wage growth, the unemployment rate, the initial jobless claim, the Xauusd, ADP, non-farm payroll. These are the labor markets. Now, don't forget that this labor is what, or was what the Feds are really, really relying on while they were hiking rates the other time. Okay, the labor market is good. We're not going to cut rate. The market is good. Let's hike rate. The labor market is good. Let's cut rate. Blah, blah, blah. And now, because the Fed has failed to cut rate for so long, not only is the inflation is going back up, the labor market is affected heavily, and this is not good. Okay, I mean, just take a look at it for yourself. The wage, unemployment rate, and initial jobless claim. Okay, these three are just flat. Okay, they are just what? They're just flat. Now, initial jobless claim is not good. All right. The unemployment rate. These are the weekly unemployment rate. Don't forget. We also have the initial jobless claim as well. Now we have the Xauusd. It's terrible from what was forecasted. Okay, I mean, more people kind of left their job. The ADP also not looking very good. And then we have the non-farm payroll, which is their father. Right, that one looks very bad. Okay, meaning we are expecting 75,000 new job added to the economy, and we only got 53,000. I mean, we only got 22,000, meaning they lost, even from what was being forecasted, they lost 53,000 jobs. So going back into this week, we have some very, very interesting data. On Wednesday, Monday, Tuesday is pretty flat. Okay, there is no red folder data. If you care about the yellow and the brown, yeah, you can definitely there will be something on Monday and Tuesday. But for me, I only focus on the red ones. Okay. On Wednesday, we have the core PPI and the PPI month on month. These are the very interesting data you want to pay close attention to. And you can see right here, PPI month on month, that's what it's expected to actually drop. Let's see how it's going to play out. All right. I'll be like, let's see how it's going to play out. Sometimes the forecast is brought down so that they actually just fly up. So something, I don't know. I don't want to be very, very weird about it. So let's see how that goes, man. I don't know why they put it that way. I don't know what sort of forecast is that. I don't know the kind of data they laid their hands on that made them forecast that. But on Thursday, we have the main refinancing rate. Okay, ECB will probably be cutting rate. All right. But I mean, ECB rate statement or main refinancing rate or rate decision, whatever you want to call it. It's coming and they're planning not to just cut rate. Okay, they're leaving it sticky, even though the inflation in Europe now is going back up gradually from 1.9. I think the last time we got the inflation is, I think, 2.1% now. So inflation in Europe is now going back up. I read about ECB talking about, maybe, just maybe, rates hike will probably start earlier than their plan. But for now, they still stay nimble on it. So let's see how that goes. But I'm not sure they're going to cut rates lower than 2.15%. I don't see that happening. Okay, potentially what they might do is just hike rate a little bit, but I don't even see that happening this early in the year. So let's just wait to see how that goes. The same Thursday by 1:30 p.m. Nigerian time, we have the corporate CPI, we have the CPI month on month. So we have the consumer price index also forecasted to kind of like come higher. Now, this is something I would get on board with. Okay, expected to come higher. If you the CPI year on year, you can see from 2.7% that we saw earlier. Now we are expecting 2.9%. Now, this is something I think could happen. Okay, this is something I think could happen. All right, or yeah, literally, it can happen. Okay, so you just have to pay close attention to this. It is very important. Okay, the CPI year on year, which is the actual CPI, that is what I like to focus on the most. All right, 2.9% from 2.7% that was released last month. That is very good. Okay, on Friday we have the GBP, and I mean in the United Kingdom we have the GDP month to month. Okay, really expected to come pretty flat in the UK. What is going on in the UK? Like, what is happening in the UK? I don't know. All right, something is happening over there, but I genuinely don't know what it is. So if you know what it is, you can put it in the comment section again. All right. So GDP is expected to come pretty flat. I don't know. I don't. I really don't know what's happening in the UK. Let's take a look at the UK economic map. All right. I don't want to be sentimental. Let's take a look at the data. All right. Let's take a look at the data. So yes. I think the United Kingdom data economy looks very smooth in a way. All right, the currency is actually very good, very strong, and we have the stock market also looks very decent. All right, so GDP is expected to come lower than this one. 0.4% is expected to come pretty flat. That would probably hit this one very heavy. It's gonna hit it heavy, like very heavy. All right, manufacturing PMI 4.7. I mean 47. Service PMI 54.2. Not bad. Okay, so for the growth, I would give them maybe 55% also. We also had something very close to this in the United States. But for the inflation, okay, the retail sales looks very good. The CPI looks pretty good also, okay, for the currency. And the PPI is pretty hot also. So I would give them maybe 40% for the economy, because they are the only thing that are quite bearish for the world, for the economy. All right, economy is still at 57%, not super bad. But the labor data looks very good, very good. Okay, you can see the newly added jobs. Okay, in the United Kingdom, that's actually good. I would give them 60% for the job, or even 65%. That is a mighty good. So when you add all these things together, you can see why they got this 57% for the economy. But for the currency, this one is good for the currency. This is good for the currency, and it's also very decent for the currency. So more like that. What I was saying earlier was about what is going on in the United Kingdom. Is if you've been watching social media, you've been watching. I mean, you've been reading not anything about United Kingdom on Twitter or X, even what Musk even post alone, you know that something is actually happening over there that is not being reported on. But it's not about the general economic story, more like what's happening in the culture, like among the people. It's actually very weird. But anyways, God is good. So moving forward, these are the top setup we have today. Let's take a look at them one by one. AUD card, very bullish. I'm not interested in AUD card, to be honest. Gold is still very bullish with score of 11. I'm buying gold right now. NZD card, very bullish with score of 9. I'm not interested in NZD card. AUD JPY, very bullish. Okay, let's just stop this like this. Okay. AUD JPY, very bullish, score of 9. I think I have something on AUD JPY. It's gonna be one of my trade recommendation. All right. Silver bullish, score of 8. I'm buying silver also. Pound card bullish, score of 8. I'm not interested in pound card, to be honest. I'm not interested in pound card. Aussie dollar, yes, I have a plan to buy Aussie dollar bullish, score of 7. Chinese 50, China 50. It's an index, okay. It's an indices, sorry. So China 50, or you can call it Hong Kong 50 or whatever. I'm not sure I'm interested in buying this one, but I have my eyes on it still. I have my eyes on it. AUD NZD, I'm not interested, but it's still pretty bullish, okay. Score of 7. But a very decent supply zone. That's why I'm not buying this. It's like a monthly supply zone. If I have it on the chart, I'm probably gonna show it to you so you see what I'm talking about. It's very decent, but I'm just not interested at all. Okay. NZD JPY. bullish, score of 7. I don't know how I feel about NZD, buying NZD JPY, but we shall see. Euro card, bullish, score of 6. I'm not interested at all. Pound yen, bullish, the score of 7. I'm pretty much interested in buying pound yen, but I'm not going to jump into it. Swiss yen, bullish, score of 7. I was actually buying Swiss yen. Then the market took me out because of my trading stop. Tight step trading stop. Then the market now jumped after the NFP data. So I kind of like just missed out on that one. I'll look for new entry and buy Swiss yen. Alright. All this Swiss bullish, I'm not buying this one definitely. Pound dollar bullish, yeah, I have a plan on pound dollar to buy, to add to my buy, to see how that goes. But the bearish side, I'm not selling. Maybe I will consider card yen short, but I'm not sure I will be, because you can see a couple of other yen pairs right here. They were reading bullish, and only card yen is reading bullish. I mean, only reading bearish. So I'm not sure how this is going to play out to factor into my technical space. But for now, I'm not interested, honestly. So that's that in top setup. Okay, now let's jump straight into the chart. We've spent 30 minutes talking about the economy, blah 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 blah, which is very very nice. Okay, it's like the chart is something we can do in less than 10 minutes, genuinely. But the economy, we have to understand it. We have to try to make sense out of it. Okay, that's why we spend so much time on the economy. Now, talking about the chart, let's start with DXY. What do we have on DXY? DXY is still very, like I said last week, I'm still largely bearish on DXY, and that is just the case till now. Okay, largely bearish until we get a break above here. That's when I can't even say that maybe we're going to get a retest of this 100 region. Okay, the 100 right there. That's the only time I can't even say that. Once we break above this 99, all right. Anything below that, it's gonna be more bearish, something like this for me on the dollar, all right. Okay, I mean, this is what we have right here on the US economics heat map, right here, right now. This is not looking very good. Okay, this is not looking very good at all. Okay, we have the growth at 50%. We have the inflation at what? At 50%. And the labor data, we have it at what? At 0%. Okay, the labor data is actually looking very, very bad. And you see a lot of bearish. Okay, this one I don't trust. Don't forget. Bearish. Now, before we used to like forecast. I mean, it used to be very different. What the impact, when the data are being released, the impact on the US dollar itself as a currency and the US stock market. All right, but this time around, it seems like they both kind of just come together to agree on one thing, that the US is not doing very well. Okay, and with the multipolar relationship after happening right now in the global world, all right, we have China, we have North Korea, we have Russia, we have India. I mean, countries that normally they would not like to see eye to eye. Okay, they don't really agree on everything, but because they have a one common enemy, they are all coming together. But anyways, heading back to DXY, enough of that. Heading back to DXY, right here you can see that DXY is still pretty bearish, all right. Earlier I was talking about 97.10, all right. If the market comes back to this region and then we get the market to break above this lower time frame trend line, all right, maybe we're gonna get it go back to the upside. Potentially, that's actually very possible. But anything below this 97 would lead to further decline in the United States dollar. And I kind of see that happening. Again, taking a look at this, okay, taking a look at what we have right here on the US economic heat map. It is not looking very good at all. Okay, nothing is good right here on the US economic heat map. The growth is it's not very good. Inflation is not very good. And then the job data is awful. The labor market is awful. So please pay close attention to the US dollar, which is the dollar index, US dollar index, the same thing, but tomato. All right, pay close attention to it, it's very important. Now let's check Japanese yen baskets. Okay, something is happening over there too. We have this demand zone right here at 6,100 and something, 6,106, this particular demand zone right here. Okay, it's never been mitigated like that. This one is very close to mitigating it, but never really touched this particular level. All right, if we get the market to come back here, there's a high possibility of us getting the market to retrace back to the upside. And now this is it. Bank of Japan plan to hike rates. All right, Bank of Japan plan to hike rates. So that might also lead to more a further rally to the upside. And for DXY, Fed is planning to cut rate this month on the 17th. Possibly we're going to get a 2.5. I mean, a 2.5%, a 0.25% rate cut or 25 basis point. Okay, they might cut 25% basis point. Or some people are even forecasting that 50 basis point is on the table. Okay, with the labor data we have right now in the United States, 50 basis points is on the table. I would actually, if they cut 50 basis points, it's not crazy. All right. So that's what I think, anyways. But let's move to my trade recommendation real quickly because we are almost out of time. All right. On gold, yeah, gold is actually very blissful, especially to me and my family this time around. All right, gold is actually very blissful, looks very good. Okay, I took two positions on gold. All right, I took one right here, which was like since 24th of last month. It closed me out when it pulled back below this particular region because that's where my stop loss was placed. My trailing stop, I was able to take 1,750 pips. Okay, I was expecting higher. Honestly, I was not ready to let that trade go at all. I was not ready. I was not ready. But it took me out. Very fair. And last week again, when I woke up and I saw that the market took me out, I took an back. Fresh new buy. I just went straight into it. And this one is running in plus 520 pips right now. It's already been trailed, but very tightly. Okay. I would rather close 10 pips than put my trailing stop at the top here. I would rather close 10 pips, just a little above my spread. I mean my swap, and I'll be fine on this particular trade. Okay, trailing stop is two-edged sword. It can work for you, and if you don't do it very well, it can work against you. And this time around, I want it to work for me. All right. So, but sometimes when it works for you, it's very painful because sometimes it will tap you out at $10, probably dip further. You might not want to buy it, then the market will just fly. Okay, so it's something you have to be well practiced and well learned about it. And then that's that. But we got 3,600 on gold. Okay, if you are asking for my buyers on gold right now, I'll tell you the only thing I have on gold is pretty much another fresh buy. The world, if you look at the world right now, the world is not looking very good. Okay, we are not in a good. The global market is not looking very good right now. Okay, I will tell you that there's an underground beefing going around between the powerful countries. Okay, the superpowers in the world, and we know them. We have US, we have Russia, we have China, we have India, we have North Korea. All those people, any country you see with weapon, okay, weapon of WMD. Okay, so those are the superpowers. We have Israel, we have I think Pakistan, we have all these countries. They are picking sides. Okay, we have people going with the United States. We have people going with the likes of Russia and China. We have the BRICS and we have the West. That's more like what we have right now. We have like Republic and what? Democrat. We have like PDP and what? APC. So people are picking sides right now. That's what is going on right now in the world. And it is not looking very good. Okay? And when stuff like this is happening, that's what rallies gold. That's what makes gold pump. That's what makes gold rally harder to the upside. All right. So potentially, I would say I want gold to pull back to this region and fly to the upside, or maybe you come back to this particular demand zone that you created last week and move upward. Now, which one do I want it to do? I don't want it to do this. I want it to do this. I'm not gonna have to trade right at the top here. Okay, but I mean, it is far away from my trading stuff, so that would be good for me. But if you're just joining, like you've not been in the trade at all, I think this is what you should wait for. Good bouncing back to this particular region and take it back, go forward. All right. I'm not sure it's gonna get there. Do I want it to get there? No. Okay, because it's gonna trail me out, and then I have to decide if I want to buy again or not. Okay, that was a very tough decision to make because if I buy again and the market will just dip further, I'll still stick to maybe right here look for buy opportunity on gold simple as that, or because of all this steepness that we've seen, might just wait for it to come back to this particular region, and then you take a buy from there on gold. That's all I have on gold. Silver, I have the same thing, the same setup on silver, to be honest with you. Okay, silver is also not looking the best right now. I took a fresh buy around this region last week, excuse me. I took a buy around this region. So it's even more like a late entry on silver. All right, and I think it's running on just 25, 30 pips right now. Nothing much. Okay, nothing really much on that one. And it was more like a late entry, honestly. I wish I had taken it right there. But my trading stop was, my penny order was at the bottom here, hoping that it's going to come back to this place. But when I didn't see it, I just took the buy right there. Now, if it comes back down, I'm not trading this yet. If it comes back down here, I will take a fresh buy if I get an entry, and I will target 45, 42, 43 region to the upside. Okay, because the next demand zone that we have on silver is still around this 42. We have a first high right here. This is not the all-time high, excuse me. Okay, I mean, to be candid with you, it's not the all-time high. So there's high potential that we can get silver all the way to the upside right there. Okay, all the way to this 44.20. Okay, so Potentially, silver still looks very good and very smooth than gold, which I would pay close attention to. Okay, we have Euro US dollar also very bullish. I'm also buying Euro dollar right now. It taps above this particular demand. I mean, supply zone. It has actually turned to resistance anyways. No more supply zone, just resistance. All right. It tapped above it last week Friday, but it immediately rejected it. All right, rejected it. Now, are we gonna get another drop to the downside, which I will just close this trade for good? All right. If we get something like that by Monday, if the market closes another bearish candle on the 4 hour, I'll close this trade and I will forget Euro dollar for good. So if you are planning to join this trade, don't join right now unless you're the kind of person that loves to play inside the range, which I don't like to. All right, but if you are, then you can take a sell. If you get a 2 hour candle that closed bearish on Monday, then you can do what? You can sell the way down to this particular support region right here. Okay, we have support, support, support. If we're gonna get a retest, because this one didn't actually come back to this particular region, so maybe this is gonna come down. All right, so you might want to look for buy at the bottom here, take a sell at the top here. You know how we play inside the range. Okay, sell the top, buy the bottom, simple stuff. All right, but if you're a trend trader like myself, when you take a look at the markets generally, I mean, in an insight, you see that the market is actually still very bullish on Euro US dollar, very, very bullish. By bullish, I mean taking a look at this momentum right here. And are we done with this 3-wave correction? Okay, 1, 2, 3. Is it done? Are we gonna get it that 50-wave extension to the upside? You know, right? Are we gonna get it? We are not sure. I can't really speak for Euro dollar because I really don't know it that very much. But my plan on a demand and supply zone perspective would be a break above here. Okay, above this 1.1730. Break above it, we get a pullback back to this region right here, which would be around 1.1735240. A retest of this particular region, then you can look for nearby. You see, this particular region right here doesn't have anything on the Euro dollar. It's going to be very fast, very swift. Because while this is happening, the DXY is also dipping below 97.10. Okay, it will be dipping below it. And considering what we've seen in the economy, the US economy right now, is not looking very, very good. And now, take a look at the retail sentiment on Euro USD. You can see right here, we have more sellers than buyers. That's good for us. Okay, because Euro dollar is at the very top right here, people think it's going to fall. And I love that. I love when people think more than doing what they see. Okay, I love to do what I see on the chart than what I think. If I'm thinking, I will also be selling this. But because of what I see, it's bullish. I would like to just buy. Okay, so people are thinking. That's why I don't like to follow the retail sentiment. Okay, simple stuff. Everything you see here is people's thoughts. Okay, they think, no, it's gonna. Oh, no, it's gonna. Oh, yeah, it's gonna. When people think, okay, even when I think about the market sometimes, even you just think about it. Your thoughts in the market, does it really work that way? No, it doesn't. Okay, it's what you see that most likely gonna work. So, I'm not saying that's the best way to go about it. Just do what works for you. But for me, the breaks above there, I pull back. It either adds to this particular position I have right here, or I just close this one if the range continues to go further, and I'll wait for it at the top here. Now, if dollar gains some strength and we get a stronger dollar, which will lead to DXY dropping, Euro dollar dropping down, I would like to sell from the bottom here. But this box, I'm done with it. Okay, no trade zone. Okay, I'm literally done with it. I'm not gonna play inside this box any longer than necessary, which I've done in the past. So pound USD, what do I have on pound dollar? I'm also buying pound dollar. Okay, this one is actually much better because we've got this 3-wave that is done right now. Okay, and now it has broken above it. Now I think the range band that is what's happening to DXY is happening to this, is affecting pound also. But I think this will actually probably just move to the upside in the next couple of days, or maybe in the next week. Okay, but I might hold on to this because I got a very good entry, by the way. Okay, so I might hold on to this even if the range continues. Okay, I might hold on to it. The swap fee is not as much. Okay, because the interest rate differential between the pound and USD is actually very close to each other. Okay, one is 4.25, one is 4.15. So it's not very far away. So buying or selling this, you won't really get much swap if you're waiting for a long period of time. And I got a very good entry at the bottom here. Okay, after this massive sweep. So that's a very good one for pound USD. My buy is still there all the way to the upside. Okay, when you look at we've seen the UK economic heat map. Excuse me. We've seen the US economic heat map and we've seen that of the United Kingdom. Okay, it is not the same. Okay, it is not super the same. It is very different. So let's actually quickly take a look at it. This is the United Kingdom economic heat map right here. You can see we have 85% strength for the what? For the GBP, and for the stock market we have just 57%. All right. And take a look at the United States dollar. You can see right here 30% for the United States dollar 30% for the United stock market. That is not looking very good. So the difference is there. The difference is also pretty much clear. So I would rather just look for much buy on pound dollar moving forward. A break above there, pull back, and then off it goes to the top. So that is what you can actually plan for. However, I don't like going one direction. However, for me to sell pound USD, I'm not going to sell anything. Anything inside this box is going to be bullish for me. Okay. But if it comes back here and break below, that's 1.3100. Okay, if you break below this particular region right here, oh yes, I'll resell that one. Okay, so this will take probably a week or two, maybe more, for it to happen. So I'm gonna be very cautious. So you will hear me speak about pound dollar a lot more even before I start selling. Okay, because it's gonna go like this for sure. That's it. This thing right here has to happen for me to start selling pound USD. So that is gonna be that for now. NZD dollar, I'm still buying NZD dollar. We talked about it last week as well. It looks very good, very decent. Okay, the plan is still plain and simple, like it was discussed last week. A break above there, we can't just cement this bullish bias the more, and we have to be trade right here. But I'm still holding this one. Okay, it was very dramatic when the US data started rolling in last week. It was very dramatic, but right now I'm still pretty much bullish on this one. Okay, a break to the upside right there leads to more for that bullish trade. So let's pay close attention to that. All right. However, if we break below here, pull back, yeah, sell all the way to the downside. But I'm leaning more bullish than I am bearish right on NZD USD. So pay close attention to that. Also, USD I'm also shorting this one, and I have a few of my friends that are also selling this with me. So it looks very good, looks very decent. Okay, I just want to see it come back to this bottom. Then I would likely close the trade for sure. All right, it can happen next week. So let's pay close attention to that. I just want a bigger, weaker dollar. Then we get this profit right here, and then we leave happily ever after on that one. Before I go, I have a trade on WTI also, which is US oil. Okay, I have a short trade on it. It looks very good. Okay, I've been holding this for a while also, and it was not without its own drama. You can see it was profitable. It was profitable, then it rallied harder, and then rallied harder to the top. Kind of just break this trend line actually, and then it dropped down last week. So I'm expecting a further cross to the downside on WTI actually. My ultimate target is at 55.15. So let's pay attention to that as well. Lastly, I have USD JPY. I think I have a trade on USD JPY as well. Bearish, but this one is not really yet ready yet. I will still say don't join USD JPY. You want to short USD JPY, just wait for it below here, below that 146.00 or even 145.50. Okay, that would give you a better entry and a more comfortable short below there. Okay, you can target this one 142.50, or you can target this extreme end right here, which is 140.20. Okay, this is 142.50. Okay, you sell right here, you make some 300 pips, and this right here will give you like 550 or thereabouts. So that would be good for USD JPY. But you want to short, but right here you have to be cautious there. Okay, because dollar is still very much ranging. There is no actual momentum right now since August. So let's pay close attention to that. All right, and AUD USD. Pretty bullish based on what we saw also on top setup. Okay, don't forget these are trades that are very much in line with what we have on top setup. AUD USD is bullish right here, score of 6. Okay, the same thing with Euro USD, where is Euro dollar again? We have pound dollar right here, bullish, score of 5. We have Euro dollar anywhere here. We also have gold. Okay, you can see I talked about gold buying also. Silver, bullish, score of 8. Talked about all of that. All right. So USD JPY, do we have here? No, but I'm still holding that one. There was a time all of them were here. I think they've disappeared. Maybe on Monday we're going to get them back. I don't know, but we shall see. All right. So back to AUD USD, which is going to be the last one I'm going to talk about. To be honest with you, I took a buy last week, honestly. Okay, but I'm not going to just I took a buy right here. Okay, got here. I'm still holding this one, but I'm going to recommend you buying AUD USD. It has to break above that 0.6650. Okay, wait for it to break above here. 0.65, no. Yeah, 6580. Okay, above here, 0.6580. We break above here and pull back very nicely. Okay, you have to break it very good to the upside and pull back. If it does pull back, don't worry, AUD dollar will give you that pullback. If it doesn't pull back, then you can look for buy opportunity. I would love to add to my position on AUD USD, just so we are clear with that. But for now, let's pay close attention to it, okay, and watch how it goes going forward. I'm still bearish on BTC and Ethereum, but it seems to be going through some emotions right now, so we watch how they also play out. On that note, that is what I have for you today, guys. I will see you in the next one. Please don't forget to subscribe to my YouTube channel, and don't forget to have fun this week. Trade safe, be patient, be calm, and may the stars of the market guide us through. Have a good day. Bye for now.